Leasing or renting out assets is nothing new in India. In fact, you might be surprised to learn just how common it is. Did you know that leasing transport trucks is so popular here that Indian tax laws have a special section 44AE just for it? And that airplane you are flying on, chances are it's leased by the airline too. For retail investors, there are two main leasing options available today. One that's regulated and the other one that's unregulated. In this video, we are going to break down both of them. So stay tuned till the end of this video. Hey there, I'm Yash Roongta, the founder of AltXtra, India's first and largest community on alternative investments. And I welcome you to the AltXtra series powered by Grip Invest. With AltXtra, we are decoding the complexities of high yield investments to help you make smarter investment choices. Today, we are talking about LeaseX, a Grip product, and Direct Leasing, two exciting ways to invest in leased assets. Both sound similar on the surface, but trust me, they're pretty different. So, which one might be the right option for you? Well, let's break it down in a question and answer format. Question 1. Are they both regulated products? LeaseX is what we call a form of securitized debt instrument, which means it's regulated by SEBI. SDI as a product has been present in the Indian market for more than 15 years and has very well defined regulations. Direct leasing, on the other hand, is unregulated. It's like renting your home to a tenant. Yes, you will have some contracts with the tenant, but if they do something wrong to the home or stop paying the rent, there are limited things that the owner can do to resolve the dispute. Likewise, in direct leasing, there is no financial regulator watching over the deal. Question 2. What type of assets are being leased and to whom? The assets in both LeaseX and Direct Leasing can be as simple as leasing out some plastic chairs to an event management company to as complicated as leasing out aircrafts, cars, ships, and many more. There is no particular difference between the type of asset based on the LeaseX or Direct Leasing route. Question 3. Are these products credit rated? With LeaseX, you are covered. Each opportunity is credit rated by agencies like ICRA, CRISIL, or CARE. They evaluate the risk for you, publish a publicly available report for you to get a clear picture of what you are getting into. With Direct Leasing, we don't have any formal ratings. You might have to rely on the lessee's CIBIL score or other info from the platform providers, but ultimately the risk evaluation falls on you. Question 4. Is my investment secured? With LeaseX, your investment is wrapped in a couple of layers of protection. Some of them are hypothecation of assets to the trust, cash collateral, and bank guarantees. Basically, if the lessee doesn't pay, the trust can sell the asset to recover your money. Even if that isn't enough, the trust can dip into the cash collaterals posted by the lessee. In direct leasing, on the other hand, you own the asset yourself. So, if the lessee defaults, you can take back the asset. It sounds straightforward, but here's the catch. You might have to deal with the logistics of getting the asset back yourself. What if the asset is damaged or hard to resell? That's where it gets tricky. You might have some cash collateral which you may have taken from the lessee, but this amount is generally only 5% of the value of the asset. So it doesn't cover the whole default. Question 5. What about returns and tenure? The returns are very much dependent on the quality of the lessees and the security package that they are offering. So it's difficult to do at par comparison, but generally speaking, both LeaseX and Direct Leasing would offer returns in the range of 12 to 18%. As far as tenure is concerned, it's again very subjective of the assets being leased. For example, a pool of cars may be leased for just 3 to 4 years, whereas assets like bowling alleys may be leased for 10 to 12 years. The tenure is more dependent on the type of asset and not on the LeaseX versus direct leasing structure. Most LeaseX or direct leasing transactions that we have come across have a general tenure of 24 to 48 months. Question 6. How liquid are these opportunities? LeaseX, being a listed security, can be traded via your demat account. So, if you want to exit, there's a way out. Although the secondary market isn't super liquid. Direct leasing is a bit trickier. If you want out, you need to find a buyer, renegotiate the lease, transfer the asset to the new buyer, bear some cost of moving that asset, and hope that everything works out smoothly. Some platforms may help you with it, but that comes with additional costs that may eat up into your returns. Question 7. How are both these structures taxed? LeaseX has a 25% TDS on the interest income, and its interest income is taxed as per your slab rate. You also have to pay some capital gains if you sell the bond for a profit before its maturity. Direct leasing, though, comes with some perks. You can deduct depreciation and maintenance expenses or even use presumptive taxation. This can lower your tax liability, meaning more returns stay in your pocket. But for tax filing assistance related to direct leasing, I highly recommend speaking to a chartered accountant, as they can guide you which option may be beneficial for your investment. So, to summarize, both LeaseX and direct leasing offer unique opportunities for high yield investments. LeaseX is a solid choice if you want security, ease, and regulation. You're part of a bigger pool and there's less risk involved. Direct leasing could be good for you if you're okay with a bit more higher risk and want a bit more higher returns. But be ready for more hands-on work and some uncertainty. While this video is powered by Grip Invest, we have aimed to stay objective in comparing LeaseX and direct leasing. Your choice should depend on your risk tolerance, investment goals, and whether you prioritize security or potential returns. Always do your research and consult a financial advisor before making any decision. That's it for today. Let us know in the comments below which option do you prefer, whether it's LeaseX or direct leasing. Stay tuned for more insights from the AltXtra series powered by Grip Invest. If you haven't joined the Alt Investor community yet, scan the QR code here or click the link in the description below. And don't forget to like, share and subscribe if you found this video useful. Thanks for watching.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.